Hello everyone. In today's episode, I interview Harrison Hines from ConsenSys Token Foundry. ConsenSys and it's a good episode. We chat about both where the token market's going in 2018, and because Harrison's read so many white papers, thousands of white papers, we chat about tips for writing them. And with that, enjoy today's episode with Harrison. Hello everyone, my name is Reese Lindmark, and you're listening to another episode of Creating a Humanist Blockchain Future. In this podcast, we take a systems thinking approach to doing good in the world, and we have a couple different series that focus on different system scopes, and today we're focusing on Series C software systems, where we ask the question, what kind of systems are we building in code? And today, I'm very happy to introduce Harrison Hines to the show. Harrison is the head of Token Foundry, an initiative within ConsenSys to help projects launch token sales. Harrison, thanks for being on the show and welcome.
No problem. Thanks for having me.
Yeah, excited to dive in. So I guess before we go deep diving, could you give us kind of like a high-level overview about Token Foundry?
Sure. So Token Foundry is building a platform to support the token ecosystem. So our goal is to help projects create, launch, and manage sound utility tokens. So focusing a lot on the token design itself, but also a large focus on the actual way these tokens are being sold and making sure that the structures of the sales are very safe and fair and regulatory and legally sound.
Got it. So pretty much anything for anybody that's doing a token sale, both on the crypto economic side and on the legal side, and on the financial side, making sure that everything is essentially as best practicey as possible. Is that kind of right?
Yeah, and I think, part of it is for the issuers of the tokens, but also for contributors to these projects. The goal is sort of two-sided, to help the issuers do things the right way, and set them up for kind of long-term success, and then also help bring more transparency and kind of best practices and standards to these tokens and token sales to help better protect contributors and hopefully attract more contributors to the ecosystem.
Got it. Yeah, so I guess that kind of leads into maybe, the reason and the why for Token Foundry right now. How do you kind of see the ecosystem generally right now, and what is kind of needed, and how does Token Foundry kind of hoping to solve some of those issues?
Sure. So I'd say my background sort of helped lead me to this. Previously, I was very early and helped build an equity crowdfunding platform called Seed Invest.
Yep.
And so I lived through the whole Jobs Act and equity crowdfunding becoming a thing. And I realized the importance. There was a lot of platforms and just like different players who popped up early in the space. And not all of them were necessarily doing things the right way or, kind of the best way. So last year when token sales first were kind of coming into existence or becoming a real thing, I quickly realized that there was going to need to be some sort of improvement or standards or best practices that were implemented, because as we've seen over the past several months or most of this year, it's kind of been the Wild West, and the current way that token sales are being done is, not ideal, and there's a lot of things that are wrong about the current structures in terms of just like contributors not really having any protection, and these projects really not having any repercussions if they don't deliver on what they promise in their white paper or what they essentially are raising all this money for. So yeah, it became very clear to me that there would need to be some sort of structure and maturity brought to the industry and the whole token ecosystem. So I thought there was a real opportunity to lead that initiative and try to become the standard.
Got it. So could you talk a little bit more about what you see that standard looking like? How do you protect the contributors? How do you kind of help the issuers, abide by these best practices? What do those best practices kind of and standards look like?
So it's constantly evolving, just because the space is moving so quickly. So I'd say part of, and what guided our thinking maybe a few months ago has maybe changed a little bit recently. There have been some fairly strong comments by the SEC chairman in terms of tokens and token sales specifically. So right now we are kind of doing a reset and trying to come up with a better sales structure standard. And what's leading that new structure is really trying to alleviate some of the concerns that we feel regulators are most or feel are most problematic about the way things are being done now. So at the very top of that list is just protecting unsophisticated and sort of retail contributors to these token sales and token projects. So that's a bit of like a multifaceted problem, and there's many ways to solve it. But things like trying to move away from some of these like ridiculous pre-sale structures, or getting rid of pre-sales completely potentially is one thing. Building in some sort of protection against those proceeds post-token sale, as I mentioned in the beginning, to ensure that if the project doesn't deliver, or maybe you could milestone out the proceeds based on certain time unlock, or on actual milestone driven schedule based on the platform going live or a certain number of users being signed up. Thank you very much. So those are certain ways you could do it. You could also implement, some of the other things that they don't necessarily love right now are the fact that maybe most of the tokens are being bought by speculators. So you could solve that in a few ways, like maybe put in contribution maximums, or, make the contributor to the token sale kind of prove in some way that they actually are purchasing this token for its utility, not just to speculate. One other big problem is we feel that the trading of these tokens pre-platform launch is problematic. So easy things like making the tokens non-transferable until some event like the platform going live is an easy way to alleviate that concern. And other little things like actually having a minimum thresholds for the sale being considered a success. So this way, if you launch a token sale and let's say you only raise, a few 100,000, and the project's trying to raise, let's say 15 million, that those people who committed the few 100,000 don't just get left kind of in the dust, that you set some sort of just minimum threshold. So everyone knows okay, if you don't raise, let's say a minimum of 3 million, then the sale is considered a failure and everyone gets refunded. Or at least you give them sort of the option to have a refund of some sort. So we're still working on a few ideas and kind of prioritizing what we feel is most critical to solve. But yeah, those are some of the things we're kind of implementing into the sales we start doing again in Q1.
Got it. Yeah, I think I mean, and as you say, there are a lot of different perspectives that you're coming at it from. One is like the classic SEC perspective, and how much they've been kind of pushing some statements these days that are more like, hey, yeah, let's get a little bit more transparent, let's get a little bit more reasonable here. And then second, all these kind of if-then statements of this, hey, if there's actual impact, then and after the actual if the protocol itself goes live, then the people who are making it can actually get some of that money. I feel like a lot of those things are powerful, and you start to see some of that like self-imposed. I'm reminded of like the Blockstack token sale, where I think they have these kind of milestones that are set up for themselves that give them that. And also reminds me, I really like the other if then there that you said is, hey, if there's if the platform's not live, then you can't trade it. And so having that as another good if-then statement makes sense. This stuff also reminds me a lot of, and especially like the minimum threshold side of thing, reminds me of the TrueBit and Vitalik interactive coin offerings article. Have you read that one, by the way, and did it inform your thinking here?
It didn't. I read it back when it came out, but I read so many papers.
Yeah,
I'd be lying if I said I remember
exactly?
the full details, but I understand on a high level what they were trying to do. Yeah.
And it sounds very similar, honestly, to what you guys are trying to do here, where it's like, hey, and there specifically is talking about this kind of back and forth between the people who are the contributors and the issuers, and this kind of back and forth, and making it an actual dialogue there instead of this kind of one-time, one-off experience. So I think that's powerful. Is there anything else on your mind as you think about kind of the token sale and ICO space, and kind of what if you were thinking like a year from now or 6 months from now, what would you want to see as kind of a mature, good ecosystem here? What would that need to look like for you?
Sure. It's a good question. So I think live dApps would definitely be a good just thing for the ecosystem, and seeing maybe how that impacts just factors like, I don't know, the token itself, how much it's used, the adoption of some of those dApps. There's a lot of interesting things I think that we'll see happen as some of these bigger ones go live in the next few months. So that'll be exciting. The other thing I think in 6 to 12 months that's going to be interesting to see how it plays out is the security token space. Mm-hmm. I definitely think security tokens will become a thing, and maybe eventually be the much larger piece of the pie in terms of tokens when it's all said and done. And I think a lot of the tokens or projects that are issuing utility tokens right now probably should just be issuing security tokens, but everyone's just trying to come up with a clever way to say that, they have a utility token so they could skate regulation and take advantage of token mania. But the market's definitely changed very drastically, I'd say very quickly. So, whereas 3 months ago it might have been a lot easier to just have a decent white paper and a decent team and get away with raising several $1 million. I think the number of projects who, are able to have a successful token sale and raise money is going down substantially, which is good. It means the market's getting smarter. But so then when you when things come back to normal, which maybe it's not there yet, but it seems like we're heading in a direction that's at least more normal. I think like trying to get creative and clever to come up with a utility token, the draw to do that, if people are much smarter about like understanding really the utility behind these tokens and how it operates within their network or their dApp or however, and can really kind of understand better if it's necessary or not, or kind of if what they're building actually is super valuable or unique, then I think you might start to see more projects opt to just go the security token route. The problem with the security token route right now is, you kind of have to work within current legislation. And from equity crowdfunding, I could tell you that the reason I don't think that space has really taken off is because the regulatory framework isn't very friendly to issuers. Mm-hmm. It's burdensome. You kind of have to limit it to accredited investors. Everyone has to accredit themselves. Like, if you want to do bigger fundraisers like Regulation A+, you have to audit all your financials. There's reporting requirements, and it costs a lot of money, and there's a lot of time. It's just not that efficient. Mm-hmm. So for the security token space to really take off, I do think you could potentially work within the current regulatory framework, but maybe they come up with some sort of new regulation T for token or something that would be really cool and would allow security tokens to really have an impact and a place within this ecosystem. But the other problem is the secondary liquidity, because crypto exchanges won't pick up security tokens because you can't trade securities unless you're regulated, and decentralized exchanges just don't have the volume and the liquidity yet. So the problem with security tokens is, they're not freely tradable from just a regulatory standpoint. So if these exchanges like T0 or Templum, or there's probably going to be half a dozen or a dozen that pop up next in 2018. But if some of those can actually launch and prove that you could trade these security tokens in a pretty easy way and good environment in terms of liquidity and user experience and stuff like that, then I do see that industry would quickly take hold and take off. So that's what I'd like to see happen in the next 6 to 12 months.
Yeah, that makes sense. And I feel like on the security token side, there's this co-evolution thing happening between the government and the SEC, and then the people who are working with issuers themselves and things like T0 on the exchange side. So I guess going deeper on the tokens there and on the non-security tokens, you read a lot of white papers, you look at a lot of projects who are looking to be part of ConsenSys or be part of get into Token Foundry or what have you. Could you give kind of a high level, what are some of the biggest errors that you see in white papers these days as a way to help these budding entrepreneurs who are trying to work in the blockchain ecosystem?
Well, I think the biggest problem with white papers is they're very inefficient. I mean, I just think there's a way better way to get information to people who are interested in your project besides a 30 or 40 page paper that describes everything. And writing a very good and easy to digest technical white paper is very hard. But then just actually for some of these projects that might be doing something extremely cool, being able to distill what you're doing down into layman terms so someone can very quickly grasp what it is that you're doing or why it's unique or why it's cool and what the protocol actually is and what the token actually does or how it fits within that system, and kind of just being able to quickly just be okay, I understand all of this. I rarely go through a white paper and get a good understanding of all of that. So I think in general, just how we present information and organize it for these projects, maybe a white paper isn't necessarily the best approach.
Yeah. But do you have, by the way, a quick question on that? Something that I always kind of recommend to people when I read their white papers is add more visuals or add more, and I think this might be my own bias in projecting out into the world, but having visuals and having kind of the system design or whatever it's like people can type in words what's happening, but it's like once I see a visual for how like the crypto economic system works, I'm like, oh, that's so beautiful. Do you do you have that bias as well, or do you agree with me there?
Yeah, so that's actually part of the new platform we're hoping to launch in, well, hopefully February 1. Part of the focus, besides just new sales structures, is better ways to present information about projects to people who are interested. Because you might have a few different people who are interested in learning about the project. It could be a user. It could be just someone like in the industry who's very technical. It could just be someone who might be interested in, purchasing your token. So yes, I agree that like maybe there's a technical white paper that's just very like, traditional blockchain crypto type white paper that's just all like just words and nothing fancy
It's
or
math, yeah.
Right. But then like have some sort of more like pitch deck or presentation deck type document or overview document that is more visual, and for someone who just wants to be like, okay, I want to learn about this project, give me a 2-page sort of executive summary or overview presentation of like what it actually is and what it does, and it could be very visual, hopefully majority visual. So yeah, it's just maybe I don't want to read your whole white paper. I just want to read that to even understand if I want to spend time reading your white paper.
Yep.
So we are thinking through like how to best structure, like maybe there's just a short paper about like a project overview. Maybe there's one specifically about the protocol and the token. Maybe there's one specifically about the token sale itself. And just break it down into, digestible, like bite-size, like pieces of information.
Yep, I like that. And I think, yeah, kind of bucketing the different parts of that white paper, because right now there's essentially no like white paper standard or what have you. On kind of the token side of this, how do you think about, and when you're reading either white papers or whatever the team send along to you, how do you conceptualize of like utility value? And when you're looking at tokens, how do you say like, hey, this token is really well used for its utility value? What makes you really feel like that's true?
It's kind of, I'd say, gut, because none of these besides like Bitcoin and Ether, none of these other like sort of new token models have actually been tested in the wild. So even if you think something is really great, like you don't actually know. And I mean, as an entrepreneur and someone who works in like tech, your assumptions are usually wrong. And like the data always ends up guiding your like ultimate product or thinking or kind of assumptions. So until we really have some good data on whether like token curated registry works, or prediction markets, or something like the Gnosis token model, which on a high level, when I think through it, it sounds very good and I like it, but like how does that actually translate into like usage and kind of how that all those economics and the incentive system within their platform, how does it all play out? So I do think part of what I look for is a token that actually has a need or is necessary. I think is pretty important, where what it's used for couldn't be easily replaced with like just Bitcoin or Ether and not really have much of a negative impact on the system or the players within the system. In terms of incentives, I definitely like things that are more on the simple side. Like sometimes people try to make their token do everything, but I think just focusing on like one critical area of your platform and having it function in that capacity could end up being like better. But yeah, it's kind of I think the token like sort of design or like crypto economics is that side of the ecosystem is maturing a bit, but it's maturing without actually seeing if any of the like initial good concepts people have thought up even work. So it's that I'm interested to going back to what I'd like to see over the next 6 to 12 months. Part of these dApps going live or protocols going live. One thing I'm very interested to see is actually how those tokens and those models people have come up with play out, because I'm sure there are going to be a few fatal mistakes that are uncovered along the way. So.
Yep, definitely. Whether it's the token curated registries or, as you said, the Gnosis two token model. It's like, hey, when those things go live or anything goes live, it's like, well, we'll see what happens when this is actually a real incentive game out there in the world. And can people break it? And what does that look like on the test net when people are testing it? And then what does it look like when it's live? And yeah, I'm excited to see those crypto economics actually live in the world. And both for the ups and the downs from that. The downs from purely from a Schadenfreude kind of perspective. In any case, my final question here is what do you think about, so, Y Combinator has this like requests for startups thing where they say, hey, here are the kind of startups that we're looking for. Clearly, you can apply with anything you want, but here's some things that we're thinking about and would love to see. Is there anything like that for you these days? But it wouldn't be called like a request for startups. It'd be like a request for a protocol or a request for a utility. Are there things that you kind of want to see in the ecosystem?
Definitely. There's definitely things we discuss internally or just think in terms of what type of projects we want to bring on board or work with. We don't send out a request, but it definitely guides our thinking and sort of the projects we speak with or actively go out and try to engage with. Because, there's a ton of inbound requests you'll always get, but, some of the better projects are ones where you are just doing research and just having a finger on the pulse of new projects coming up. And if you know what you're looking for, it becomes easier, especially if you talk to enough people in the space to know who might be working on something interesting in that sort of realm. And also in the position we're in, we also have somewhat of not a responsibility, but are conscious of what the market wants. Because, if you're working with projects and with this platform, you're sort of growing an ecosystem and community of contributors to these projects. If you're putting out projects or working with projects and putting them on the platform, and these contributors are looking for token sales and what you're putting up is not really what they're looking for or not what the market likes right now, then that's not really an effective model. So, just in general, I think right now there's much more interest still in infrastructure and protocol layer projects. I think people understand that we're still building the tracks. So for any of these dApps to even work on top of an Ethereum, they're going to need some of these scaling solutions to actually work and launch. And I think there are probably many other just foundational layer or just scaling type solutions or more infrastructure layer protocols that probably still are out there. So those are ones I look for. But yeah, if there's a cool dApp or something, we will definitely still consider it.
Yep. That makes sense. And so there are specific protocols and utilities that you're thinking about and that you guys talk about internally. And in general, a lot of things that you're interested in these days are stuff at the infrastructure layer, at the protocol layer, as still building that rail out there. Although we want to live in this beautiful new future, it's like, hey, in order to do that, we still got to work on a lot of these kind of infrastructure projects to make that happen. Cool. Well, Harrison, thank you so much again for your time today. It was fun chatting and going into token sales with you.
Yeah, thanks for having me. It was great chatting with you, and look forward to keeping up to date on your show.
Nice. Sweet. Well, everybody, thank you for listening. If you want to, you can go to tokenfoundry.io to kind of to learn more about Token Foundry and or hit up some people at ConsenSys to learn more about Token Foundry. And if you want to support me, you can go to patreon.com/RieslinMark. That's patreon.com/RHYSLINDMARK. Okay, thank you, everybody, and goodbye.